What's up, everyone? Nice to be here with you. I'm excited. Second time using StreamYard, other than when I just did the Benziga interviews. Um, First of all, can you all see okay, hear okay, everything look okay? Just give me a yes. And I love to get the yeses in the box and feel the crowd virtually as it is. Uh, Let me see it. Awesome. Okay. And if you came just because you met me this morning, I actually really enjoyed my interview with Benziga this morning. Just put a B. I'm just curious who just saw me on Benziga this morning and came for the first time. I know I have the T3 audience, which I'm psyched about. So if you came from Benziga, put a B. And then T3, over the years, I've actually, we used to share an office space. Well, it goes even back before that. The founder of T3 was the best man at my wedding. I was the best man at his wedding. We used to share an office space together. And then we started to work together again. But we've worked together literally forever throughout the years. So you probably have seen me in the T3 audience. So if you've met me before in T3, just give me a T. I like to see where everybody's coming from. All right. You guys all see how to, and for everyone else, you all see how to use the chats and stuff like that. Give me anything. I see a lot of people, but I like to see the things just get flooded with comments. So just put C if you just to prove you know how to use the chat. Thanks, Jessica, Aldo, Wayne, Robin, Dan, everyone. And there we go. Eric from South Carolina. Okay, cool. All right. Yeah, I like to have an engaged audience. What I'm going to do is kind of a hybrid presentation. I'm going to go through some things that I want to make sure I don't forget to discuss, and then I could go into my trading screen and share that. But very excited to be here with you. Very excited for what we're about to go over, and let's go from there. So I'm going to present slides, Mesh Prime. There we go. Look at me. Look at me using technology. There's the disclaimer. No one can ever guarantee profits or ensure freedom from losses. You guys all see this slide okay? Yeah? Okay. Obviously started. Okay. The number one reason I came back to live events, you might say, and Patrick or JJ, if anyone, like Alan said there's no audio on his end. I guess I could, Alan, turn up volume, audio working. Just don't like to leave anyone behind. Okay. So I've been trading since 1998. So for 26 years. From 1998 to 2006, my job was to train professional traders how to day trade. Okay. And then I ended up going on television and I got a lot of exposure. And Schwab sponsored a section where I taught people how to trade, and everyone wrote in asking for help in the stock market. At which point I started to send a newsletter to the public. And it started as day trading because that's what I was versed in. But then it went to swing trading because it made more sense. And then it switched into options trading when that made more sense, which it still does. And on that note, with options trading, I just want to ask one more question, and then I'll probably won't ask questions for a while. How many of you trade options? One, you trade options. Two, you don't. Three, you don't, but you want to. Okay. I don't know about the different songs. I don't remember. I think I played a lot of songs. So yeah, one is you do, two is you don't, three is you want to learn. Okay. All right. So yeah, we're going to be covering options. pretty much I focus exclusively on options. If a stock's cheap, like there is one, and I'll show you it, that we were willing to own, still are willing to own because of dividends, but most of the time, I'd say over 90% of the time, we're only trading options. Okay. So my background was in day trading, got into swing trading, then options trading. Spoke a number of times as an all-star of options trading at the trade expos. The industry has changed. That's probably why I got into options trading. When I started day trading, it was like man versus man, right? And when I say man, it's man or woman, but no computers. And what happened was they switched from fractions to decimals, and then the algorithms came in, and the stocks moved so erratically from the algorithms that it didn't make sense anymore to day trade. So I started doing swing trading. But then the options market got much more liquid, and options traded like stocks used to trade, more natural moves, which I really enjoyed. So I started getting involved in the options world, and I haven't looked back. I grew my company. I was emailing at its peak over 1 million people every day, with over 15,000 members of my community, which was fun. And then I ended up selling my business to a company called Tiffin, which is great. They own a company called Magnify, which is AI for finance. It's phenomenal. Like every day it gives me updates on my portfolio. I could link things. Really, really cool stuff. Happy to be a part of that journey. Was psyched to sell my company. The only thing was that Magnify doesn't do anything with the options. So they like me. Everything was a good fit. And so after 3 years, I was able to get my company back. And it's pretty interesting to get something back where you did it for, so I started this company in 2006 and it went till 2021, 15 years, took a 3-year break, got it back. And the only question was, what do I want to do differently? And there's one simple answer. And I think that this, how many of you have ever bought any kind of trading subscription? Anything. I don't care if it was $1, just put yes, right? So as I grew the company over 15 years, every time we introduced new strategies, there would be new services. So I had OMM, MD30, Mesh Private Portfolio, Phoenix Letter, and then all other different people doing things. And they evolved over the years, and each one was a different strategy. And the one thing that always kind of bothered me a little bit was I always wanted to consolidate them. I always wanted to have all my trades in one place because it made more sense. Like, why would I force a credit spread if a diagonal calendar would? Well, the answer is I wouldn't. I would never force a trade. So what would happen is there would be times where we wouldn't put trades on. The trade flow would lack because if I don't like a good trade or I liked a better strategy, a more appropriate strategy better, then I would focus on the other strategy, right? And so if you were one service but not the other, you weren't getting those trades. So when I came back, I said what I really wanted to do was put all my trades in one place. Okay, that's how I got the name Mesh Prime, because it's one place for everything. And I did that, and not only do I love it because I could put on whatever trade I want, and I have the same audience for all my calls, which I love, but most importantly, probably, the track record is responding really well, and I'll show it to you. Our trades are going really well because I'm able to put on different trades at different times, and it's been really successful. Okay, so I got some fun announcements ahead. I'll certainly answer any questions you have, and that's why I always put overtime. When I have a big audience like this, I'm always willing to talk for as long as it takes. So let me give you a brief overview of what I do with options. And then I'll show you how it's all included with Mesh Prime, and then we'll have some fun. I could show you the track record, my current trading screen, what I'm trading today, and answer any questions you have. But this is the beginning. This is the quick history. I got a lot of exposure early on. I was on Tonight Show. Jay Leno was talking about my success. I got written up in a lot of articles. So I had a lot of credibility coming in, which allowed me to build an audience, which I appreciated. It started with this. Fortune magazine came, and a gentleman by the name of Nelson Schwartz stood over my shoulder and watched me make around $20,000 in 20 minutes. And he did a really positive article. Then Fortune covered me 2 more years, and it led to a lot of really good exposure. So it was good credibility, but it was credibility that was earned by documented success. Okay, so I said I did day trading, then I went to swing trading. I'm going to skip ahead to my first options trades that I ever made. A really good options trader came to me and said, with your ability to trade stocks, you would love selling puts. And for me, the idea of selling a put was like a time machine. It was like if I missed a trade, I could go back and put that trade on. And the very first one I ever did was Starbucks. And I said it started the bet I couldn't lose. I don't even have it up here because most of you know selling puts. So Starbucks was trading at 70. I owned the stock, and it made a move to 72.50 at the time. And I was upset that I didn't own more because I loved it at the 70 level. So rather than chase it and buy more at 72.50, what I did was I sold a 70 put, and I collected 67 cents. 10 contracts, that would be $670. And what I loved about that was if Starbucks, which was trading at 72, as long as it didn't go below 70, I make $670. I was getting paid to make a market in that stock. If it did go below 70, I owned it at 70, less the 67 cents I collected, which means I owned it at 69.33. So here I was upset that I didn't buy Starbucks at 70, it's at 72, and I'm willing to own it at 70, and now I'm getting paid $670 for my willingness to own it at 70, and I'm actually going to own it at a cost basis of 69.33. That whole idea I loved. I even did a trade like that recently. I'll show you the stock I did it in, and it's worked out really well. So that was great. But as I moved on and got to know my audience, the majority of the people I work with didn't want to own stocks. And so the strategy evolved from selling a put to a credit spread. It's the same thing. You're selling the 70 put, but now you're buying a put underneath for protection. So your risk is contained and the trade will just come off. If it's between the legs, you would have to close it out. But the strategy took a new approach where we were never going to own stock. We were just going to collect premium. Okay. That was going really well. It started with 17 trades, and the first 17 trades I made were 100% winners. Not that I made double my money, meaning that I collected 100% of the premium. The reason why premium collection is good, and I see Brian asked, do you mostly buy or sell options? I do both. But when you're selling options, that's premium collection. You're the house. You're making a market, and as we know from Vegas and everything else, the house always wins, right? Okay. So as people got very comfortable with the credit spreads, they said there were 2 things that they wanted. They wanted a little more upside, because with a credit spread, the most you can make is the amount you collect at the beginning. So we wanted more upside, right? More capital appreciation, and less time sensitive. And so I started doing diagonal calendar trades. And that is where you buy a long-term option, typically at the money, and then you sell weekly options against it, above it. So in that Starbucks example, maybe I would have bought the 72 call going out 3 months and then sold the 74 call above it. And I start to collect premium. And when you're collecting premium against your long call, which is a synthetic covered call, you're reducing your cost basis, which is great. And at the end of the day, you can own an option at a cost basis of 0, which is pretty cool. The street had said that the calendar is my favorite strategy to execute when I want to take advantage of short-term weakness or strength that I think will eventually and in time revert and cycle either back up if call-based or back down if put-based, which is perfect sense for a market that's gone straight up this year. The strategy is risk-controlled on the short side and can become open-ended on the long side. And what happens is if you eventually cover your cost basis, you could have infinite returns, meaning you own an option at zero, so everything you make is infinitesimal in terms of return, which is pretty cool. So the diagonal is made up of one long and one short with different months and different strikes. The benefits, the characteristics of diagonal are it's put on for a debit, unlike a credit spread where you collect a credit. A diagonal is put on for a debit. It benefits from time passing. It benefits from increasing volatility. It's a defined risk trade, and profit is realized on closing the trade. Your max gain could turn into an unlimited. Doesn't start unlimited, but it could become unlimited. And your max loss is the initial debit, and that goes down. It gets smaller every week with the credits you collect. But one of the things that stands out in the characteristics that I want to point out here is that it benefits from increasing volatility. And the reason why it's important to know that it benefits from increasing volatility is because we are in a very, very low volatility market, very low. And you want to know that going forward, if the market gets worse, if the market starts to go down, which means volatility will increase, that you have strategies that will be successful. And these strategies, while good in an up market, are great in a market where there's increased volatility because the premium collection becomes even more. Okay? I already explained this. So what I love about a diagonal calendar, number one, you're going to get confidence because if you're buying a call and selling a call against it, you can't lose on both. One of them has to win. Either the long call goes up or the short call, you collect all that premium, or it goes up and stops where the short call is and you win on both. So you can win on both. You can't lose on both. You're going to win on one. That's going to give you confidence in the market. It's also going to give you discipline because you know you're reducing risk every week. So you never have to panic, get out of the trade early, or lose sleep wondering, like, how much could I lose? That's always defined at the beginning. And because there's a premium collection component, you get paid every week. So the components are, if you're long a call, you're going to sell a weekly call above it. If you're long a put, you're going to sell a weekly put below it. And it focuses on weekly income collection. Okay, so let's take an example. This is one of the trades we made. I just had this and I just threw it in there. So the prices aren't the same. Let me see, by any means. But it was a great find in MU when it was at 40. It's a long way from there now. But the chart, this is just a great example of that I've always kept of why I like this. We liked MU when it was at 40. Okay. And if we wanted to buy the 40 call going out, I want to make sure you could see all this. If you want to, if we wanted to buy the stock, it would have cost $4,169. But if we wanted to buy one contract, right, it would cost just $435. So first of all, by buying the option at the same price, it costs a lot less. But here's the interesting part. Where they're going to sell the 42.50 call above it. So we put this trade on in February, and we were buying the April call at the money and then selling the 42.50 above it. And even though it cost $435, we were selling the call above it for 70 cents. So let's look at the math on this. Okay. If you take the number of weeks, times the 70 cents, you're collecting $6.30. Okay. 630 times one contract, which equals 100 shares, is $630. The original cost was $435. So even if the stock goes nowhere and your long call expires worthless, so that's not a best case scenario, you're still making 44.8% because the weekly premium collection adds up to more than the cost of the long-term call. Okay. Here's another one in Ford when it was at 22. If you want to buy the 22 call, it's $1.71. Okay. But then we could go and sell the weekly call for 36 cents. 36 times 11 weeks, because that's how long we had the long call for, equals 396, right? 396 times 1,000 would be $3,960, right? The original cost of the option was $1,710. So you're looking at an ROI of 131%, again, if the long call expires worthless. Okay? We're going to benefit as long as the stocks stay somewhere near they're expected to, as long as there's not an extreme move. And if there is, we could still collect premium, but that's what we don't want, is some kind of extreme move. Okay. And it's also fun to be able to put on these trades and trade the different markets as they become hot. Like obviously right now, NVIDIA and SMCI and AI is a big play. Over the last couple of days, the small caps, the Russell, I don't know if you've been watching, just exploded from 200 to 222. Really an insane move in the Russell, like a run on the Russell. But it works on everything. When Bitcoin was hot, we traded Riot. You remember Riot? We got in Riot. We put this trades on, and we did really well buying options. We were in Riot at $5, which was a lot of fun. Okay. Okay. So now where are we? Right now we're at a place where I'll put on whatever trade works in that market. So I could buy a call, I could buy a put, I could put on a credit spread, I could put on a diagonal calendar. I have what's called a mesh trade where we'll do a bullish bull put going out long term, and then do bear call spreads. So it's credit spreads, both bull put and bear call, used as a diagonal. That's a mesh trade. I'll be able to show that to you too. People love that. And just very consistent, picking apart this market, choosing our spots, and looking to build a really nice track record income stream through options. Okay. This is what an alert looks like in Mesh Prime. So we really spell everything out for you. In this one, we were doing a bull put credit spread in Uber. So Uber was trading at 64.32. And this was May 29, 2024. This is one of the first trades we put on in Mesh Prime because it just got started. And we sold the 62.58 for 73 cents. And then we closed them for 39 cents. We added a trade in Palantir, which ended up being really good. We were trading at 22. It's now 27. And this is when we roll it. So here we owned, you could read it. Palantir was at 23.44. We owned the July 1922 calls, and we were short 4 of the June 14th 23.50 calls. We bought the 23.50s for June 14th and sold the July 5th 24 for 26 cents. So we spread out the diagonal. We went from 22 by 23.50 to 22 by 24. So we went to $2 wide, okay? And we got paid to expand our trade. That's the definition of a roll. Have you guys seen that before? Give me a yes or no if this makes sense. I don't want to spend too much time if you all know it, but if this doesn't make sense, it's important you understand what this roll is, because the roll is an amazing options component that a lot of people don't get. So please just take a moment and just say yes or no if you're comfortable with what a roll is. Let's give a second for the Y's and no's. Okay. All right. Cool. All right. I'm actually getting some yeses, but also getting a bunch of no's. So let me spend another second here, and then I'll go into my trading screen a little bit, and I'll show you too. Okay. So Palantir is trading at 23.44. We own the July 19th 22 calls, and this was June 7th. So we had gone out a couple months, right? So we own this 22 call. And then we were selling the weeklies against it. So we had sold the June 14th 23.50 call against it. So the 22 call we bought for a debit, and the 23.50 we sold for a credit. Now Palantir went higher, so our 22 call went up in value, and it's further out, but it was getting close to our 23.50 call that we had sold. So what we did, and we did it early because we had sold the June 14th. This was on June 7th. So we did it a week early. We bought back the 23.50 calls on June 14th. So that goes to zero. And now we sell the July 5th. So we go further out, the 24 calls, and we're getting a credit. And I'll show you this in the Tasty screen later on, of 26 cents. So we now would own the July 19th, 22 calls, and we'd be short the July 5th, 24 calls, $2 wide spread. Plus we got paid 26 cents as we expanded it. The reason why we got a credit for expanding it, even though it was going up, is because we put it on for more time. We went from June 14th to July 5th. Okay. And here we closed Uber. We bought the rest back for 5 cents. So this was a really nice win. So pretty much all my past services used to be separate. So I had the Mesh private portfolio where I was willing to do, I was willing to own stocks and put on longer term positions. That was $13.97. The Phoenix letter was just calls and puts, $9.97. Options Money Machine was $4.95. Mesh Delta 30 was $1,097. And what I'm doing with Mesh Prime is I'm putting all those services in one place. Okay. And because I joined with T3, we have my own trading room. You guys are used to the virtual trading rooms. I have my own room, my own portal experience. They have alerts going out via apps right away. And I still do my weekly trading twice a week via webinars. Okay. And I'm going to show you, I'm going to go into my trading screen. I'm going to show you everything. I'm also going to go into the track record, show you everything. But just so you don't think you're going to have to pay what the price will be, which is $24.95, this is being set up as a membership, okay? Where you pay a membership fee and then there's like monthly maintenance, okay? But as it's early on and I'm building my community, we're like at 100 people right now. And I really just want to quickly get to 500 people. That's a good number for me to have. So we have our first 100 in for the last month plus, looking to get 100 more today. So the membership fee of $24.95 is waived. You get a legacy that you never have to pay it. Okay, we're waiving the membership fee. And to join, it's literally just $89 a month. But I realize that it's July and a lot of people might be going away. And then they have back to school with kids, grandkids, whatever. So it's $89 to join, and then you don't pay again until October. Because I really want you to have time to use it, experience it, and not feel trade pressure to like, oh my God, we have to put on a lot of trades in August to make sure you're using it. So it's $89 to get in for the next 3 months. So as I'm going through all of this and you're getting excited and you're like, I want to be a part of it, I want you to think it's $24.95. Literally, it's $89 a month, but you don't pay for the next 3 months once you join now. Comes with the alerts, trainings. We do 2 trainings a week. Kind of like a no-brainer price. But the best part is all my trades are there. So I'm never going to be like, oh, now I'm doing this. You have to buy it. This is it. This is it. One time you're in, I'm back. You know, it's like a second act in that sense. I had my company for 15 years, sold it, got it back, thought, what would I do differently? I said, I just want one community where I have the same people everywhere and we just put on the trades. This is it. It's been going amazing, as I'll show you in the tracker and everything like this. But save this link or whatever it is, however you could join. Save the link here. Here it is. They chatted in the box, adameshlive.com/special, or you could call in to join. And I'll show you that again later, but I just wanted to get that out of the way. And now I'm going to show you my trading screen, and I want to go into the track record. So let me just make sure I could share screen on this. I'm going to share my trade portfolio manager. Look at me. Okay. So this is Mesh Prime. As you can see, we got started May 8th. And I'm actually most proud of our only losing trade so far, which was the Qs, because we actually got bearish here. I'll click on it in a sec. We bought, I couldn't be more proud. My only losing trade is the one that I'm really the most proud of. We bought puts in the Qs on May 20th, the 435 puts, okay? Which is crazy because the Qs right now are at 494. But because of our premium collection and everything else, even though it went 60 points against us, we only lost $197. So forget the good trades. The best example I could give is the one losing trade we had. We only lost 197. Okay. Then we put on this Uber trade, and I just want you to see exactly what we're doing. We put on the 62 by 58 credit spread for 73 cents, closed it out, made $321. Then we put on the diagonal and Palantir, and you can look at this risk. The risk on this trade, we put it on, we bought the 22 call, and now you could see it spelled out. We bought the 22 call for $1.80. This is the example before where I was showing you guys the roll and you didn't understand it, so I want you to see it here. Okay, so let me go through this real quick with you right now. Okay, so we have the 22 call for $1.80, and then we sold, and this is on June 5th. We bought the July 19th 22 call for $1.80, and then we sold the June 5th. On June 5th, we sold the June 14th 23.50 call for 39 cents. So our risk is around $1.40. Okay, that's our total risk. But then we bought back the 23.50, sold the 24, and we collected another 26 cents. So now our risk is $1.14. And then we closed the whole trade out for $2.08. So on a trade where we're risking $560, we made $372. Okay? And that's what you could expect from us. I'm just doing the math on this. 372 divided by, what do we risk? 560 is 66% we made. So if you would have done 40 contracts instead of 4, you would have made $3,720. So if you want more money, it's just bigger size. But we always typically try to keep them small so everyone feels comfortable. We made a winning trade in IWM. We did a bear call at the 203, 206, closed it out. This trade was over a while ago, but good thing because IW1's the one that got hot. Palantir, this is what I mean by we could do different trades. We finally got a bearish reading in the market around June 20th. I don't know if you remember. And we just bought puts for 44 cents. And then we kicked them out for 80 and 96 cents. People love this trade because it's 100% in a day. Okay. And then here's one we were willing to own. This is one we introduced to the community. They liked it. It's YMAX. It's an option strategy around tech stocks that pays a really good dividend. We wanted to take ownership. We sold the 19 put for 20 cents. It's looking like it will expire worthless, so we just collected the 20 cents, but we would have been willing to own 100 shares of this and collect dividends. And then the other day we put on a bull put credit spread in GameStop 24.21. We collected $1.02. We closed half for 56 cents, and right now we could close the rest for 40 if we wanted to. So this trade made $435, and it risked 800. So we made over 50% on our money on this trade too. So track record wise, keeping it small, just trying to build it up, get it going. If you were involved for the whole year already, your membership fees would have been paid for, plus you would have been up $500 or $600, and we still have like 10 months to go. So I think people are really happy, and we're doing really well with this. So I'm going to go into my trading screen right now. But before I do, I just want to go back here, Mesh Prime. Let me just go. Sorry. I don't know how I just did that. One sec. Present, slides, Mesh Prime. There we go. I definitely want you to go. Bottom line, do me a favor, everyone who's here, come check me out. It's kind of a no-brainer. If you're unhappy in the first 30 days, you get a refund anytime on this $89. So it's risk-free. And then you get the next 2 months free, okay? I do a call every Tuesday. We did a market breakdown today, obviously talking about the Russell. We do a webinar. The next one's either Wednesdays or Thursdays around noon. It's recorded if you can't make it live. Alerts are sent out via the app, and then we send out all the trades via the app too. Okay. And if you pay now, you get it's $89. You don't pay again until October. And all I want to do is have a community for years to come, provide you with good trade ideas. It is a lifestyle. Most of these trades you could have put on within hours and been fine. Some even days, and you would have been fine. So it's not day trading. Very easy to get in. And take a minute now before I go into my trading screen and sign up. And I want to welcome everyone aboard as you come. And if we go exit full screen, so we do 2 calls a week. Steve, I'm not sure if you joined. Someone will check for me. Robin says, does this include an app that has the options? We just need to use your own trading account. We send out the trades for sure. Okay. Brian, 2 calls a week. Any other questions you have? And then do you guys all see the link in the special so you can join? Okay, there we go. Let's see who. Okay. So this is kind of my happy place. This is where I'm doing what I've always wanted to be doing. Trading options with one community. All our calls, everything is in one place. There's nothing else you need. And we're just going to look to keep on putting on winning trades. And if you're new to options and you're trying to learn, then this is a great way to do it. Okay. You guys want me to go into my trading screen now? Look at what we're looking at today. Give me a yes. Does everyone have the link? So, Jim, typically like 1 to 2 trade alerts per week. 1 to 2 trade alerts a week. But I really do. I promise I'm not being greedy or anything like that. The $89 and the thing. I'm trying to build the community up. So I do hope you all come and jump in and become a part of it. I saw Michael did already and Edwin did, but love to get everybody. Brian did. This is what's fun for me. Like I come on here to recruit. This is my recruiting journey. Steve, yes, you're already in. Which is better now, Robin, Canadian or US? Okay. I'm gonna give you guys, and guys always affection for men and women. Just take 1 more minute. So again, $89. If you're unhappy anytime in the next 30 days, get a refund. If not, you have all of August free, all of September free. So if you're going away, you actually have until probably this day in October. So this day is, you probably have it's free until October 16th. You don't pay again. Okay. I'm trying to make it a no-brainer for you guys. You'll get the trades every week. You get the calls every week. And I think it will be a lot of fun. All right. So let me go into my trading screen now. Let me see. Present. Present. Share screen. Share screen. I'm going to go to how do I window? There we go. Do I do any simple call and put options, or are they all more combined? No, so the favorite one we did was the Palantir trade. We just bought puts and kicked them out for 100% win, JM. Ken said, can someone always around to chat? We're not like a 24/7 kind of thing. The market's open during market hours. We always tend to be available for anyone that needs help. So here's my trading screen. Proud brand ambassador for Tasty Trade. Here comes CGC again. Nice. JJ, also, if you want to text out the Tastyworks link, Tasty Trade link. If anyone's interested in a Tasty Trade account, you should check it out. But here's a great example of like other things I do that you'll be able to see when we do the weekly teaching. Like here, I bought 600 shares of ASTS at 11.17, and I've been selling calls against it. So right now, I sold the 15 calls for November, and I had collected $2.26. So like my cost basis, and I've collected before this too. Like if you go to ASTS and you go to chains, yeah, let me do it. I've already collected $845 in ASTS and premium, in addition to what I'm up in the stock. So my cost basis is like $8. I'm almost going to own the stock at zero soon. And so I keep owning it, selling premium against it. Great trade. JMIA is another stock I had missed. It made a big move. I wanted to participate. So I sold the 11 by 950 bull put credit spread for 33 cents. And you could see I'm up $300 in that, trading at 13 and change. SoFi is looking good. I want to see if CGC can go. Here's the YMAX trade we made. Here's GameStop. Where's GameStop? Here's GameStop. So here's the 24-21 trade we put on. This is, as you see, winning trade. And then I also had sold puts in GameStop, took ownership, and I've been selling calls against it. So if you look, I sold the 30 call for $4.10. And I own GameStop at 28 and change. And I've actually traded this really well. I don't know if you could see when I bring up the order chains, but I'm up $2,000 in GameStop in addition to, that's closed in addition to this. So I've really been trading well. Strategies are really working. And I guess my money is where my mouth is. Okay. So I got here late. Access brand new Mesh Prime virtual trading floor. What are the hours? So typically Tuesday we do 11 to 12, and then Thursdays 12 to 1. And then other than that, it's more of a lifestyle where we trade. We chat out the trades and stuff like that. Canadians are going to be able to use Tasty Trade soon. Okay, but otherwise you can do other ones. They are coming to Canada soon for sure. They said it the other day. So typically, Anil, managing risk with options, I think the risk is already managed in the sense that you're the most you could lose is either the amount you pay for the option. We'll never sell a call without buying a call behind it. Like we'll never sell naked options with the willingness to be short ever. So the risk is always managed because it's the initial cost basis minus the premium collected, or we put on some kind of spread. But we won't put on a stop loss typically because when the market's open and the options gap out, you could kind of get manipulated, which is annoying. You know what I mean? Like they could just stop you out for no reason. Ed said, so you sell the weeklies every week until the original option expires. Sometimes we close the trade, like Palantir, we close the trade. What happened? Like, yeah, if let's say like we sold a 22.24 Ed in Palantir and it's trading at 27, so we're not going to be able to roll it. We're still profitable. We're still profitable. You know what? The guy who actually helps manage my money, in one of my other accounts, I was trading this ASTS in more than one place, and he followed me into the trade, but he sold a lower call against it, and it kept going. So he just let himself get taken out. He's like, oh, I lost money. I'm like, no, you made 20%. You just could have made more if you had sold the option further away. How much capital should be in a typical trading account to properly use your service? 25,000 is where you get 4-to-1 margin. I know people that start with 5,000, 10,000. I wouldn't say less than 5,000. The goal is always to get to 25 so you can do day trades and stuff like that. Stay thirsty. My friend said if you're in Canada, you should try Interactive Brokers. I've heard they're good too for Canada as well. Until Tasty gets there, for sure. Okay. Oh, who just joined? Louise, welcome. Eric, thank you. Ken, appreciate it. Peter, hello. Listen, I'm just trying to be as real as I can be. Listen, we're not going to make $1 million here. This is like my version of fantasy football. We're going to have fun. The goal is to make money. It's not a hobby. We want to make money, put on good trades, talk about the market, come up with good ideas, and be in it together. And sometimes, it takes a lot to qualify for a trade. You see how many trades we've done and how many I've won on with Mesh Prime. I'm super, super selective. It's like friends and family. The last thing I want to do is lose for people. But I share my screen every Tuesday, and I show you the other stuff I'm looking at. So CGC today, someone said something about cannabis, which doesn't get active very often. And I started watching the different cannabis stocks and, just take a look at its high. I took a speculative play here, bought some options. See, I lost. This isn't any of our services. It's just me, but I own these for the rest of the week. And if it could, I don't think this P&L is right, by the way. If it could tick up a couple of cents, I'm going to be happy. This JMIA we found. Where IWM traded today, small. Something's going on with SoFi. So I am an open book. I always share my screen. I've never heard of that, Kim. So I don't know, but if they don't, and if you can't trade or whatever, and you join, then just cancel, get your money back. That's why it's a 30-day trial, and you get an extra couple months free after that because I know people are going away and stuff, and I want everyone to feel comfortable getting in. Yeah. Okay. What other questions do you guys have? And guys is always affectionate for men and women. I'm a big fan of saying you guys. You think the CGC can go up in the last 2 hours? That would be fun. So Tuesday is 11 to 12. Thursday is 12 to 1. Okay. Who else is coming in? We have a good amount of women in the community. I always want more. So Kim, Robin, come check it out. JJ said just got out of SoFi calls. Will have been nice last 2 days from entry for calls or no premium. Brian, sometimes, yeah. Typically, no. 0 DT, no. Christian Tharp does that really well. I'll typically do, the Palantir. Maybe I'll do the weekly or 2 week if I'm buying calls and puts. If I'm just buying calls and puts, those will usually be a shorter time frame unless I want to leg into a trade. Okay. Nice trade in JMI. Thank you. Pat, you guys want to just send out the link again? Someone just to get the link out again. It's fun. We keep adding to the community. I was hoping to get 100 people today. But if you come in, I think you're gonna like it. I really do. And you can see I'm as transparent as you get. I just come on and show you everything. You see my screen. You see the track record. But I think most importantly, we're winning. And I think you can feel fairly comfortable with that. So you guys, did I show it correctly? Did you guys all see the track record? I just want to make sure. Hey, Amber. Thank you. So there it is, adammeshlive.com/special. Live.com/special. So let me just go to that screen for a second and stop sharing. Present, share screen, window, there, it's there. Okay. So you get access to the virtual trading floor, no membership fee. You get the Tuesday, me and Christian Tharp come on. He breaks down the market. We talk about everything in play, what we're watching, different stocks, access to all my trades, the portfolio tracker, and then the Thursday live webinars that we do. And if you need any help, it's always there. 100% money back guarantee. Pretty cut and dry. All right. And you get 2 months extra free, which is really cool. Oh, share screen, window. All right. Any other questions about anything? You want to just stay here? You guys have been good luck. You want to see CGC hit 732 and pop right now? You see a little bit of a bubble. And the next thing we want to check, by the way, when you start to see, I saw it, by the way, I'll show you where I get a lot of my ideas from. Share screen, Windows. Here. Am I sharing this? Yeah. So I go here and it will show me what's trending, what the most active stocks are, top gainers, top losers. And so this is like a big enough community where like it's going to get my attention if something's trending. So CGC was trending. And then once I see it's trending, I call my friends who know that sector. I ask them what's going on. I start to feel around with some options to see what's going on. And then I also want to pay attention to the volume on it to see if the move is substantiated by activity. And the average volume is almost 10 million shares. Today it's 3 million, which would mean it's not, which is why I haven't initiated a bigger position. Okay. I'm navigating this StreamYard thing well again now. Okay. Yes, we'll have a replay available. The rest of the GME trade, we're gonna let it go down more. It's moved far enough away that I feel pretty comfortable. Who else joined? Alan, welcome. David, welcome. Fun. It's always fun to get new people. I love to see the community growing. I'm psyched to have you. I'm going to be doing this for years to come. It's my only service. I thoroughly enjoy it. I'm literally doing exactly what I want to be doing and just looking for good people in the community to do it with. So if you enjoy the style, if you enjoy the authenticity, that's the biggest word, very authentic. You want to come on each week, participate, get calls, do trades, please join me. And if not, either way, enjoyed speaking today. I hope you learned something. Hope you like my style, my strategies. And with that, I say thank you for your time. All right. Do email alerts go out for the Tuesday? Yeah, you get reminders for them, Greg. And then if an alert is sent out, it gets sent out via email and text and the app. Will my room show up in the menu of T3? You could ask Patrick that. Patrick at adammesh.com will answer that. I think it shows up in the room. I'm pretty sure it does. Robin, you're welcome. Steve, you're welcome. Thank you. And to everyone who participated, that for me is what makes the calls fun. So truly, I appreciate you. Thank you for participating. And that's it. Be good, everyone.